Good morning, everyone. I think we need to get started because we have a long day ahead of us. Welcome to this beautiful spring day in Oslo, which we are going to dedicate to blockchain. My name is Liv Freyov. My day job is as Director of Industry Policy at IKT Norge, or ICT Norway, where I also head FinTech Forum, which is a network and working group for fintech companies coming out of Norway. And today I'm going to try to make transitions between the presentations as smooth as possible and be your guide. We have a fantastic day ahead of us. Some of the brightest heads in technology and finance are here today. We have speakers who have flown in from all over Europe, combined with entrepreneurs, bankers, techies, strategists, and intellectual property specialists here from Norway. The day will unfold a bit like this today. We're going to start with a keynote presentation here, after which there will be a short break where those of you who want to follow the future tech track can move along and take seats in the room across the hall. In this room, we'll have the fintech track, and parallel to those two tracks, there will also be workshops where you can get your hands dirty and try to create your own assets, exchange cryptocurrencies, and so forth. And you can take a look at your program for more details on that. There will be a 1-hour lunch break at 12:40. That's a little bit late for Norwegian appetites, so we promise to serve something in between at an earlier break, just to tide you over. Toilets are, and I really wish I could say this very smoothly, but you're just going to have to look for the signs. They're out in the corridor and up some stairs or down some stairs. And I would really like to say a very warm thank you to our sponsors for the event today. They are Blick Solutions, Cantega, and Beck. And these companies had complete belief in this event when it was when the idea was presented to them just 2 months ago. And that brings me back to today's event. Like I said, the idea for Oslo Blockchain Day started just 2 months ago. And it was planned as a very small event for the few people who are passionate about blockchain technology, who really passionately cared about this. And that was the plan, only there turned out to be massive interest, and that interest only grew as the agenda for the day came together. So just from the turnout today, you would think that blockchain is almost a mature technology and that we have all the answers. And I think, as I was speaking to one of you about earlier today, that's not the case. We don't have all the answers. I doubt that any of the presenters today will have all the answers. This is more, starting a discussion. And very soon, I'd like to introduce Jon Ramvi, who's the guy behind the whole event today. But first, I'd like to say a few words about him. Jon is a curious, zealous tech entrepreneur. He started failing really early on. He founded his first startup when he was 13, and it failed miserably. A few years later, he founded a company called Easy Peasy, which developed an operating system for netbooks. That OS was downloaded more than 2 million times, and that gave him enough cash to keep launching new ideas. The last 2 years, Jon has focused solely on blockchain technology. He's writing his master's thesis on it, and he's founded a startup called GameCoin. He's also working to build a community of blockchain here in Norway, which this Oslo Blockchain Day is a huge part of. John has single-handedly done all the planning, all the speaker bookings, all the logistics for this day today. So all your praise and also all your complaints can be directed at him. But before we get that far, let's invite him onto the stage.
Thank you. I'm so pleased to finally be able to welcome you all to Oslo Blockchain Day. There are actually 2 other blockchain events in Oslo just today. So with 3 blockchain events on the same day, we can see that blockchain is really taking over in Norway. And it's amazing to think that this is only the beginning of the history of the blockchain. Hence, it's going to be important to develop a blockchain community here in Norway and to create a national network, hopefully even a Nordic network of blockchain players. And this conference is the first step in that direction. Anyway, I want to thank all the volunteers and all the speakers who are here today. It wouldn't be possible without you, so thank you very much. And thank you all for attending. Now, Alexandra Wilson will welcome you from Startup Lab.
Hi everyone, are you all okay? I think the humble Jon needs a big hand once again for putting this together. So my name is Alexandra Wilson. I am the co-founder of Startup Lab here at Oslo Science Center. We help entrepreneurs try to help them excel in their line of businesses. We have about 65 companies in the lab. We help them with equity. We help them with mentors, networking, and access to corporates. So since we started this 4 years ago, we started only with 4 or 5 companies in the lab, and today we have been helping and supporting about 150 companies, and that's pretty good, isn't it? Yeah. But it all comes down to technology for us and for you as well. And today we're going to talk about the blockchain. And do we really know how that will affect us all? Do any of you? So how many of you guys know what to do about it? Please raise your hand. Okay, so you can count them on one hand, basically. And I guess the rest of you guys are most of all curious about how to deal with this and how this will affect your business. Isn't that right? Okay. And at Startup Lab, we're kind of, in my time, I've been working through 2 major paradigms. The first was internet, like 15 years ago. And that was commercialized, and we saw endless amount of creative business ideas coming out of that. And the other paradigm was mobile, that I at least experienced. And I guess today you do not only see blockchain, but you see a line of a lot of these paradigms. So you have artificial intelligence, IoT, DNA sequencing. Do any of you guys know how that will affect us all? Just a few years ago, it cost like $2.6 billion to do a full DNA sequence. Today it costs like $1,000. It's pretty neat. So the question is, how will this affect us all? And this is really hard to predict, right? None of us have the crystal ball, and I guess we're going to gain some insights during this day. So as a representative for the entrepreneurial community, I would like to encourage at least those of you coming from the corporates to be open-minded, curious, and try to support the startups that will arise around this new technology, blockchain. It might not be that the specific focus of each and individual company will be relevant to you, but what surrounds it and the insight you will gain from supporting it might add a lot of value that you are not able to see today. So please, I encourage all of you to support the community, support the startups, and we at Startup Lab will also support the startups with funding and supporting from our resources in the years ahead. So if you're curious to learn more about Startup Lab, we have some people in red. Rolf, Per Einar. It's not Oslo Arbeiderparti. It's Startup Lab people helping out. So if you're curious, please contact us in the breaks. Thank you.
Okay, so let's get started with the program for today. First up, we have a keynote from Burak Yetiskin. He is senior manager at Accenture, where he is responsible for Accenture's work on distributed ledgers and blockchain technologies, including cryptocurrencies, digital money movement, settlement, trade finance, and mobile wallets. He works out of Zurich, Switzerland. But I've also scratched a little bit below the LinkedIn surface of Burak. He started out as an analog chip designer, microchip designer. And he did that for many years until someone pointed out, a bit discreetly to him that with his social nature, he might do better in a job doing strategy consulting. So off he went to Accenture, where he still is today. Burak is also a professional photographer, and he actually makes a living partially from selling his photography at art auctions. So if this whole blockchain thing really doesn't work out at all, Burak, please join us.
Mostly focusing on, well, how did we get to this point from a technology that was designed to circumvent financial institutions into a technology that helps now financial institutions to actually be more profitable and do their businesses in a way that they had not done before. So the key starting point is the origins of blockchain, because when everything began, the blockchain topic was out. I say two and a half years ago, I started to see articles on magazines about the Bitcoin technology. Was the first way it was introduced. And how it was introduced was that it's a revolutionary way for money movement beyond the outreach of banks. Well, when if I were at today, had no information about how blockchain and Bitcoin works, I myself will be very frustrated about something that's emerging that is able to do what I am doing as a bank and is targeting directly the pie or revenue stream that I am basically generating business out of. So, well, it was created as a digital currency, and it was, most importantly, designed to operate without banks and without governments. So we have two impacts. One, from a financial institution's point of view, it was a big impact that, well, now we have a new player, but we don't even know who the player is, because this is not another institution or a company that is targeting banking revenues. There is no one person who says, I am Bitcoin. And from a government perspective, it was also somewhat hard to identify the individuals behind it, because, well, money was moving across the borders, and this could be cashed in and cashed out by either by individuals or by pools or by basically companies even, based on the country you're in. And, well, we can't control the flow of money. And on the other hand, the second question was, how was this generated? Well, there are no gold reserves that are backing up this currency. Well, it's basically a group of people who decided that this asset has a monetary value. And the monetary value was also fluctuating rapidly. So the question was, well, how do we either understand how it works and start taxing it from a government perspective, and from a bank perspective, well, how much of an impact does it already have in my current businesses? Is it actually going to target all the revenues I'm generating by cross-border, cross-currency funds movement? Well, of course, it was to be completely decentralized, and it was to operate without the need for trust. Well, meaning that today, when we look at how money moves, we have known entities, known individuals who are KYC'd, KYC'd, PII information is entered. We know where the money is going and where it's coming from. Well, none of this information was necessary on a blockchain network. You could basically know the public address of any individual that sent and received the funds. Well, of course, it gained even more interest once they saw that, well, this is now the money of internet, as people could start doing shopping. I actually bought flights right after New Year's throughout South America with Bitcoins. And I also needed to provide my ID to identify who I am. A copy of passport of a scan of my passport was sent by email, and I could actually purchase flights. Well, online, just as I would do with my credit card. Well, the difference was that normally, if I fill in all this information and I send it by, let's say, a bank transfer, it would probably take a day. But with Bitcoins, it was a few seconds. So the speed of the transactions was one of the key points. The second was the price of such transactions, because if I'm transferring money from Switzerland to, let's say, Brazil, I would have to pay a large fee for a flight that's only worth $100 or $200. Well, if you're using Bitcoin technology, we're talking about on the order of cents, or maybe even none, depending on how fast your transaction should go through. And for the convenience-wise, well, if you're taking your Bitcoin wallet with you, you're basically carrying your funds with you physically, and you don't actually need to transfer anything that is a physical asset. So an experience would be that if you're traveling to a country where it's very strictly regulated, where money transfer and currencies are strictly regulated, well, basically you're taking all your cash with you. And as long as you can cash out by an individual, you actually did take the money into that country on a USB stick. Well, of course, some challenges, of course, came through with this. Well, in the very beginning, I remember you could basically mine with your GPU on your laptop while you're working. Your GPU would be mining, and voila, you have Bitcoins. Well, today it doesn't work that way. If you're looking at the FPGA technology, after a couple of months, you have to replace all your mining equipment because it's rendered obsolete. It is not fast enough. It is not, the cost of electricity doesn't really cover. So that's why we have now mining pools. The nodes have changed from completely decentralized nodes to big mining pools, a couple of them in Switzerland, a couple of them in Asia, a lot of them in the US. So it's been almost industrialized, the mining processes. So it changed in nature, making it less lucrative for some individuals who always saw this as the free currency. Well, also there's the fluctuations of the currency was quite rapid, moving from order of cents to dollars to $1,000 plus, and then crashing back to 400s, 200s. Well, if you're putting your wealth in blockchain, it might not have been the best thing if you bought them around 600, 700. And we don't know where it will be going. And every time there is a public release of Bitcoin technology will be utilized or accepted by any any government entity, the price, of course, fluctuates. And most importantly, the activities. When we talk about blockchain technology, well, maybe not as much, but when we say Bitcoin, the initial reaction of all participants will be, okay, this is where you buy drugs, or this is how you do illegal transactions. Well, of course, looking at the past history of activities relating to Bitcoin and the news, you would also see a significant number of news about how the Silk Road, the marketplace, was offering basically anything. And the pseudo-anonymity of blockchain Bitcoins covered some shield for certain individuals, let's say for drug trade, for basically anything. You just need to use the Tor browser to access the dark web and go to any marketplace. It is not only the Silk Road. And as you also very well know, the founder was actually, they could easily identify the founder, who was, if I remember correctly, was using a Starbucks Wi-Fi to even connect to the internet. But it is very much identifiable. So this also tells us that the anonymity concept of Bitcoin is not as anonymous as it may seem, because depending on what you do, on what scale of order you do, well, there are cases that people will find out who you are. They might not want to go for one single topic, but if something big is happening, it might be possible to very much run an analytics engine on the blockchain networks and understand or identify certain individuals by looking at their track history. Well, the financial institutions were first analyzing the money movement case, but there were so many cases that initially thought using the blockchain technology. Well, of course, Bitcoin is how everything began, but there are different applications for secure identity or for community governance and collaboration tools. Well, because when we look at the blockchain, we are basically talking about a way of managing data and how data is stored and how data is added and not removed, but let's say added on new rows on a system. Well, I myself had worked in a bank years and years ago where we had a database where I could add rows, remove rows, change values on a database. And apart from the backups they have had, well, if you change something in production, it changes forever. This is how banks work. And of course, geographically distributed backups are kept at different locations, but records can be changed. Well, any application that requires that a database remains intact, you can do it on a blockchain. And any application that requires a level of trustlessness, where all participants who access the database have to agree to a conclusion that this data can be entered into the system, well, it makes sense to use blockchain. So what would you use it for if you're using digital identity? Well, well, if I have a social security number, it's very unlikely that they will change the number, but they can change my status, my driving license points, if I'm driving too fast, or if my marital status changes, or if my residence changes. You can always look back into the past records of where I lived, all my addresses. For example, in Switzerland, when I rent a new flat, I am obliged to give past records of where I had lived, and I am also obliged to bring them a record of my credit risk or any on the loans unpaid. Well, all this information could be kept on a single database where I cannot remove past records. If I had lived somewhere prior to moving to the new flat, it would make sense to put this on a blockchain, I believe, as a consultant, to just keep it on the same database and look back into where I had lived previously. So such uses of blockchain are, I find it very much interesting, apart from what is already being done on the Bitcoin network, and I believe that this would significantly change our lives and the way we work. So, of course, all the use cases that we had just discussed, in a regular database model, we have, of course, the central node and everyone connects to it. What happens is that it creates a lot of load on that single node as well. On the other hand, if something is changed on the central node, everyone has to comply with that information. It's just like a central database. You query it, you get an output. Well, what would happen if you have no single point of failure? No need for trust because everyone keeps a copy of this information, and it's basically completely decentralized. So this can be geographically distributed and centralized, meaning that if some natural disaster occurs at some point, well, the databases are stored in every geographically distributed location. Another node that comes up can copy all this information and still keep up the systems, which is basically changing the way that we use backups. So one more question that I also get about this technology as a beginning point is about the proof of work. Well, of course, especially financial institutions, when they look at the system, they all say, do we need to build miners? Do we need to buy mining equipment? How do we build an ecosystem for ourselves? Well, we don't need to, actually. We have the proof of work mechanism because it made the most sense when the Bitcoin network was out there to mine and reward the nodes for basically running the systems. And there had to be some sort of way of rewarding them. But if we're talking about an ecosystem, which we know the participants of, and we have a good incentive to run these nodes, just to run the nodes, just like a bank runs a database so that you keep a record of all your customers, it is an incentive to keep it up. Well, what would happen if you would not have to reward the nodes that are keeping your information? Well, then you can look into different consensus mechanisms. So, of course, there can be zero-knowledge proof, and a proof of stake could also replace what we're doing with the proof of work algorithms, which makes absolute sense as long as it is moving from a permissionless network to a permissioned network, meaning that I today can access I can be a part of the Bitcoin network by downloading an application, and no KYC, no know your client is required. But what if I were to control every participant in this ecosystem, and whomever enters this ecosystem would be completely identified? Well, then likely I would have a complete different system of individuals that are identified who are maybe registering for this ecosystem, maybe paying a monthly fee for the system. So the proof of work can be replaced with other consensus mechanisms which make sense based on the ecosystem you are building. So what happened after the money movement cases were analyzed was about smart contracts. It's basically having a certain input that generates a certain output. This also has been of very much interest as firms, as primarily beginning with financial institutions, corporations started to look into, well, how can we utilize blockchain, provide certain contracts where an input given by any entrant on a permission system would trigger a certain output. Well, especially in trade finance, when we're looking into a smart contract where an information about funds transfer needs to be triggered out by certain inputs, it makes absolute sense. And of course, tokenization has also been of discussions in parallel. Well, many of the ledgers today have a purely digital asset, which would be basically, it can be in Ether, it can be in Ripple, a token called XRPs. Well, they are basically doing the economic incentive part on your proof of work algorithm. And they're also preventing a spam or a denial of service attack. So if you would like to, let's say, do a DDoS attack, which some of you might be familiar with. It's basically flooding the system with so much information that normal requests to access the system would not be able to be answered. So you would get a 404 message if you're trying to access a website where there's a denial of service attack on. Well, if you're using a token, this couldn't happen because basically they would run out of funds by the time they're trying to finish their denial of service attacks. So in tokenization perspective, it makes absolute sense on such permissionless ledgers to utilize a token. Well, then again, permission systems may not necessarily need those tokens because you know who the entrants are. Think of yourself right now as a bank talking to other banks. Well, we know where the message is coming from. Look at the SWIFT network, where it's a messaging network. You know where the message is coming and going to. It wouldn't happen that somebody's spamming the network. So you might not need the complete, full suite of applications that Bitcoin today provides. And there are so many use cases based on the technologies we've looked into. As Accenture, we've gone a focus of identifying exhaustively the use cases that would make the most sense in the very beginning of this technology. And of course, we prioritize some of the use cases that will be a part of our ecosystem. So payment processing, of course, is a very important use case, looking at how the technology emerged. We looked at market trading and settlement and at trade finance and financial services. We look into the global idea of consumer data. Well, especially in a fragmented database world between governments, what would happen if we could have a global identification for an individual? And what if different countries, different entities, different corporations were able to access this information on a common blockchain? That, of course, in a permission blockchain. We, of course, looked into business and commerce and smart contracts and retail payments, and as well as secure messaging as a very interesting use case, which would make sense in the short to mid-term. And on public services, I myself carry the belief that it will have the most impact, especially on smart elections, global criminal records, public records. And the reason being so is that I myself, having moved to Switzerland in 2010, when I first arrived as a person moving in from Istanbul to Zurich, I couldn't bring in all the records, and majority of the records didn't make sense to different governments and to different credit risk scoring. So I was first given a credit card much less in limit than I had back in Istanbul even. And those records couldn't communicate to each other. Although I had a good record from one side, it took me a while to start life from new and gain an acceptable rating, a credit risk score to take a loan or to take a credit card. And what if this information was to be communicated between these countries? Well, I will very quickly go through some of the use cases in detail before I come back to the impacts of such public services and the impact on society that it will bring. So, of course, money movement is a very important use case. This is how it all began, based on the technology as well. Today, we're using correspondent bank or central banks to move money. So, a real-life case, when I send money from Switzerland to Turkey, it would take around 1.5 to 2 days of time for the money to be in my account. Well, of course, I also would have to go through an FX rate that is provided by the bank, which may or may not be to my favor, but then again, it will take quite a lot of time. I would have to pay a fee for it. And these were all the questions that were addressed by the core Bitcoin technology. It was supposed to be faster, cheaper. Well, on the other hand, today's correspondent banking network is actually not up to speed as much. As of today, of course, there's the PSD2 regulations coming in. There's, of course, the appification concept that's coming in. But as of today, it takes still a significant amount of time. Well, of course, between the sender and the recipient bank, there's also correspondent banks in the middle as players. So they also charge a fee that's associated with it, depending on the country you're sending it to and sending it from. Well, on the blockchain technology, it's basically ledgers talking to each other, nodes talking to each other. So the linearity that comes with the correspondent banking network is somewhat more circumvented through a blockchain-based network. But of course, there is no intermediaries to charge those processing fees, as entities can talk to one another. And today's blockchain technology, well, settles in around 10 minutes. If you look at Ripple technology, it settles in 5 seconds. And also there are custom solutions that can be adjusted. The settlement time can be adjusted. Of course, the counterparty risk is also eliminated because it's straight through instant processing. And whenever I make a transaction on blockchain, for those of you using Bitcoins, you can go to blockchain.info. I have actually a public wallet. You can see that at lunchtime in Switzerland, I go to Niederdorf to a small cafe and I pay for my lunch with a Bitcoin wallet, and it's publicly visible. If I were to give you the public address, you could exactly see how much I paid, at what time I had my lunch, and keep track record of these. Well, it's full visibility. And this visibility is also important from a bank perspective, where depending on the country, you might need to keep your records for 10 years even. And it also provides a good track record where you can relate to, or if you're sending money to a different country, if I send money today, I have to send the receipt that I made a money sending request. Whereas on blockchain, even before the transaction settled, the information that the transaction will be settled is communicated near instantly. So another case, as we mentioned, is trade finance. Just like the case of me transferring money, instead of me sending money to Turkey, this could have been that I'm buying steel from, let's say, from country A, and basically the seller wants to know whether I'm sending the money. Well, the moment I make the transaction, they will be notified that this request has been put in. So this is not only money transfer, but also the issuance of letters of credit can be done on the blockchain. And today, what is paper-based and has to be manually processed, creating significant delays. It can be up to 20, 21 days. These processes can be done in seconds, and it would not require any duplicate of documentation. The processes of KYC could be handled over a blockchain, and the exchange of documents can be done on the blockchain, which we believe will create a significant impact. Well, also from the capital markets side, as you know, in May, there was the first public announcement that NASDAQ pre-IPO shares will be traded on the blockchain platform. And though asks and bids are done centrally, the information of who owns what will be kept on the blockchain. Well, we believe that compared to the state as of today, to the potential future where ledgers, the one unified ledger, is being accessed by the buyers, the firms, the brokers, the clearinghouse, the custodians, which connect to the ledger, would make a significant difference to how we do business today. So quickly going through these, I mean, on collateral management, on the integration of a distributed ledger, we believe that from a capital markets perspective, there will be some significant changes. Also on the centralized collateral exchanges, where the desks would be talking to each other through a peg ledger and the movement of assets kept in another ledger, exchange could be handled. So from a centralized collateral management point of view, as a trading desk, at a collateral management function, and as a technology function, there will be significant impacts. Also, the issuance of warrants can be handled on the blockchain, where the first, as the initial starting point, a corporate would be able to instruct the asset servicer to issue a warrant to the market, where the token of the warrant will be placed on the blockchain and be delivered to the potential buyers. Well, of course, when you have a permission network, instead of a permissionless network, where participants are identified, the ecosystem would change significantly, where shared token could be shared between the corporate, the underwriting institution, and the custodian, all on the same blockchain network. So again, the token exchanges, being able to basically, the service providers on exchanges and settlements, blockchain is sitting in the middle. Well, you have both the asset services and the investors talking to the exchange, where the information between the accounts is settled on the blockchain. So recording on ownership on the shareholder voting is also quite important. This is a question that comes up regularly on how shareholder voting would be configured on a blockchain. There's also another, for example, we're showcasing the very short scenario, or a corporation to allow shareholders to vote who will become the next chairman, and how they could cast votes on the blockchain, to first of all avoid duplication and to create a real-time platform. Of course, all such applications we're looking into in permissioned private ledgers, basically not on the public Bitcoin ledger. And of course, recording of share ownership can also be handled on the pure blockchain platform. So on-chain, basically ownership of on-chain could be facilitated completely on the blockchain. I'm quickly going through these just as a brief on what would be the possible applications. I'm starting from the very initial beginnings. of money movement capability into smart contracts, into trade finance, into the more complex capital markets use cases, then we see how real applications, which would make significant impact on your daily operations, would come to reality. So also another point of view was on the impacts on society. On the right pillar, as you saw in public services, I believe it will have significant impact to how we do business today and how e-governments today operate. I was just very surprised last week while I was registering my phone's email number. When you enter a foreign country, you might have to register your email number. I could do it all completely online. Basically, my social security number and password, and one-time password was delivered to my mobile phone. I logged in. I put in the email number, my passport number, verification that I entered the country was done. Total process, which used to take me around a day and a half, was done in a few minutes. Not on a blockchain platform, but then again, it was e-digitization of governments and the processes that have already been taking place. And what if this information could be stored on a blockchain, or the moment I enter the country, such records would be communicated directly on a blockchain, so the verification of me entering country wouldn't need to take place through a manual process behind the digital front end. Well, I believe that one of the most significant impacts on the proof of ownership of things, this can be land, this can be property, and this is actually a significant problem in developing countries, that the proof of ownership, which is basically written on paper, has to go to the notary services, has to be stamped and verified. This is quite a long process. For those of you who purchased a flat or a house, I'm sure you had to go to notary, get your document stamped that the property is owned by person A or entity A, shifted to entity B or a person B, is a significantly long and arduous process, and a costly process as well, depending on the country you're in. And although it is a very straightforward process in most developed countries, it is still a problematic process in developing countries where records may also be altered in certain countries. That's why they developed a blockchain solution for that today. And the proof of ownership will be a very significant use case that is upcoming in certain countries. As a gate to financial inclusion is also quite important, is that most of the foreign aid, I was surprised when we were making the research, doesn't even reach the end destination. Because the money movement or the aid movement itself goes through so many hands that there might be some discrepancies based on the country. And I was very surprised and very much disappointed that the aid actually that you want to provide doesn't really make it to the person. Well, what if if we remove intermediaries? Again, looking back on the blockchain's specialty is that everyone talks to each other, everyone keeps a record of all the information. So this means that any problem we are looking into due to intermediaries can be resolved if you're using blockchain. This will be the game changer, and this is the game changer. And I will suggest from a financial services point of view, from an insurance point of view, from a healthcare point of view, always analyzing the situation as what is my problem? Does blockchain's 3 key elements apply to it? Maybe a good starting point. So that's why a gate to financial inclusion is also in here, because it's an intermediary problem that it doesn't make it to the people in need. And of course, and also record keeping, since everyone keeps a copy of such databases, well, keep proof of ownership and proof of identity is a very interesting use case. So global digital identity, which we previously discussed, is a very important topic today because individuals traveling from one country to the other, well, all we have is a passport. I was recently educated about, in 1950s, I believe, in Norway, you could travel basically, a Danish citizen could travel to Norway with their IDs, settle down, and immediately start working. The process between the Nordic countries was quite straightforward. Well, it is not that way for the rest of the world. So that traveling with a passport, having a stamp on it, I was very surprised while I was traveling in Southeast Asia, how many stickers I had on my passport after 2 months. And every time they had to verify the passport, check the name, look at me in the photo, ask me where I'm going, stamp it. Well, there was no way of global identification. And every time I entered, they say, well, you have a beard now, so you don't look like a photo. Which after months of backpacking, of course, you change quite a bit. I started with a nice photo back in traveling, and by the end of the travel, I would look in the mirror and look like someone completely different with a tan too. So, well, what if they could actually put this on such a way that the passport wouldn't have to be checked by a person looking at the photo and me and trying to compare and contrast the two? Well, this could be used as a very interesting use case. And if these governments could communicate between each other, it would completely change the way we work today. As another interesting example is marriage certificates. Actually, there's a very interesting example which a colleague of mine just recently went through. A non-EU citizen living in Switzerland marrying another non-EU citizen, actually an Argentinian at the time. After proposing, the process took around 4 months for them to get officially married. Well, first of all, you first have to verify whether they are already married in the country they're from. Well, the governments don't talk to each other. So you first ask the Turkish government whether they're married, and then ask the Argentinian government whether they're married. Swiss government says, okay, now they're not married, we know it. Let's get the paper signed and let the two governments know. Process one. Well, what if those governments need to talk to each other? Again, this is a perfect use case for the ledger. Instead of using a linear way of communication between those entities and having this long verification process, what would happen if all information could be on a blockchain? The process would take seconds. You would have a global ID to verify the individual status of marriage, and then basically check as technically possible, and then communicate it back on the ledger. So all entrants to the ecosystem would immediately be informed about the new status of this individual. Takes minutes. This is a very interesting use case. The first time I heard their story, because they were complaining at work about why it doesn't work, the post never makes it. The very basic problems of everyday life could be solved by the blockchain. And of course, wills, refugee IDs, biometric information can be stored. Well, of course, from banks as digital authenticators, you look into the KYC information and KYCC information, which can be problematic based on the countries you are communicating between. You might have to provide the minimal information that's required for the transaction to take place, and that information could easily be accessed as long as you're using the public keys of the individuals to communicate their core information to verify that the transaction can be sent. Well, of course, financial account logins and credit card transactions may also be put on the blockchain, and for such applications, of course, recommendations will be to optimize the type of blockchain you're working on. As you know, there are limitations that come with a blockchain. It is not the ultimate solution to every question. And based on the speed of transactions, the speed of settlement, the number of processes that needs to take place, you might want to look into it in detail, what kind of blockchain would actually serve your needs. And not only that, but we also have governments and central banks explore blockchain technology today. In the European Parliament, there are discussions on how blockchain can help the ecosystem to contribute to consumer welfare and economic growth. There is quite some public information that is readily available on the European Commission's discussions. In Estonia, the e-residency has been out there for quite a while. There might be some of you who are Estonian, there might be some of you who are registered as e-residents. E-residence is not e-citizen or e-permanent resident. It doesn't give you a work permit. But what it does is that it helps you to first establish your residency. All paperwork is done electronically. And you do need to set up a bank account if you want to set up a company. This is usually the primary reason why the majority of the people had an e-residency. Then again, you need to physically visit a bank, which we believe soon will change. Today, you need to get an e-address from Estonia, which you can do it online. And then you need to open up a bank account, and you need to be physically face-to-face in a branch today. That will also change, so you can do everything online by logging in. And that's, of course, you're able to then completely maintain your business, go to your online banking, go to your corporate accounts on the internet. Of course, Japan is also considering to treat Bitcoin as the equivalent to real money. And of course, there had been, Honduras was the example of basically recording property titles on the blockchain where records can be tampered with. So we believe that it will become a critical piece of infrastructure for governments to keep records of citizens and settle their matters completely on their own. Today, we do have quite multiple governments which provide e-government services. But how this is communicated and how notary services are being held may be on paper, although certain requests can be put in online. Putting them on a blockchain completely changes the way you manage the paperwork today, not only provide a digital front end for the processes. So just to sum up, what do we do as Accenture? Well, we are very much focusing on the expertise of blockchain as consultants to understand how do we relate blockchain technology to everyday life and everyday use cases. So we're looking into the use case definition, and we explore the use cases which would be applicable to have a value driver. So, well, blockchain is interesting, and it's out there all being discussed in magazines, in Sibos this year recently, in Money 2020, but how much of it actually makes sense for a specific use case? And if deployed, if such technology is to be put in place or to run parallel, well, what is the benefit that comes with it? The tangible, the measurable, the quantifiable benefit. And this is very important to us. Where we are launching a lot of point of views and thought leadership, we're mostly looking into the applicability of such cases rather than just, well, news about the blockchain. And that's what we mostly keep focus on. We do have partnerships. We run an open innovation process, which looks into startups globally and understand which of these assets offered by the startups actually make sense to develop. Accenture does have a partnership. There's an alliance with Ripple and Digital Asset Holdings, and also provides an innovation accelerators. We do have labs in Sophia Antipolis. For those of you know, it's in southern France. I believe it's one of our most beautiful offices with great weather. We are running research and development activities where we are running certain blockchain instances and experimenting with the technology. I'm always happy to visit our office in the south. And of course, we have prototypes for cross-border payments, for P2P payments, and energy marketplace and atomic transactions. So we also have a Ripple instance running there, where we've been running this for quite a while now, looking into how Ripple technology can work in as a, let's say, a core distributed ledger technology could work for financial institutions. We do also experiment with Bitcoin, and we also provide FX trading. And we, of course, have the digital asset holding, financial clearing, and settlement the applications running. And we do have a distributed team. Our team is global. I am based out of Zurich, but we have quite a few members of our young team, as I call. We have actually masters and PhD students who are working exclusively on blockchain, and we have most of our reps in Europe. We're focusing on the technology, looking into what's being done, as I believe Europe and also especially the Nordics being a primary driver of such technologies and the adoption of such technologies. So this is also, the team also helped me to get all the content for you together. Thank you.